Good morning, good afternoon, depending on what part of the country you're joining us from today. My teammate Shauna and I are really happy we get to spend this hour with you. We appreciate you all joining and giving us or spending an hour of your day with us. And as you get settled in, just want to let you know there is a handout loaded into the GoToWebinar pane. If you've attended these user groups before, you know there's not a ton of information on it, but there is some good information. So if you want to grab that now, you can while you're getting settled in. It'll be sent to you as well. So we'll go ahead and just kind of kick off with some housekeeping. And how do these meetings work? As we go throughout today's user group meeting, and this is a user group meeting, this is all about you all. It's all about all of us sharing ideas and comments and tips and tricks. So as we go through the hour today, please submit your questions, your ideas into the question box. We won't be monitoring the chat box. And we will answer as many questions as possible during the meeting, but if by some chance we have a deluge of questions, we will make sure that we follow up with an email if we can't answer you during the user group. After today's meeting, you'll receive a survey. Your feedback is truly invaluable to us. We read each and every survey, so we would ask that you would just take a quick moment to complete that survey. As I mentioned, the handout is in the handout section of the GoToWebinar pane. And if you're interested in receiving a CPE credit for today's user group, we will need you to answer all 3 of the polling questions and complete the survey. The survey will have a checkbox for you to indicate that you would like that CPE credit. And I will be reminding you of that requirement as we go as well. For those of you who might be new to StandBy-NS, I'd really welcome you to go and explore our website. StandBy-NS is such an interesting firm. Started off as CPA services only over 100 years ago, which is always fun to say. But for the last 60 plus years, our firm's focus has been on the AE and C space, mostly the AE space. And we have really branched out into a very rich offering of professional services. And so we've listed a few things that might be of interest to you here. But again, if you haven't explored our website, please go out and see if there's any other services out there that might be helpful to you. And just a brief introduction, I see a lot of familiar names. So I know that a lot of you have heard this month after month. But for those of you who are brand new to our meetings, because I do see a few of those names as well, my teammate and I will just take a brief moment to introduce ourselves. My name is Val Higgins. I'm the Managing Director of Ajera Consulting and Project Management Training here at StandBy-NS. I have been working in the AE space, mostly the E space in my professional career for 30 plus years. Really, all of my professional life has been spent in the AE space. And in 2005, I had the opportunity to start using the Ajera software. And as it's grown up, I've learned more. And in 2014, I decided to make a full-time change into consulting. I really love helping people find ways to improve their business workflows, to train their project managers, to use the Ajera software and other tools to their advantage. And I've had the opportunity to sit in some of your seats using the software and to train on the software. And Shauna and I met when we were consultants at Axiom and then at Deltek. So a lot of interesting experiences and really lucky to be able to do what, I love to do every day. So I'm going to let Shauna introduce herself.
Thank you, Val. Hi, everybody. I'm Shauna Pace Powers, and very similar approach to my career as well in Ajera. I have been using the software for the last 17 years, either on the client side, sitting in seats like yours, or on the consulting side. And obviously that's where we're at right now. I absolutely love being able to impart and share knowledge and learn from other people too. We're constantly learning, the software is improving, processes are improving. And so that's really what today is all about. We're going to share some knowledge. And as we do that, we definitely want your input as well.
Thanks, Shauna. So our agenda for today, pretty simple. We're starting a Did You Know series. So, our team does a lot of brainstorming around what topics should we present for user groups, but also we read every single survey comment and all of your ideas, as well as the ideas you put into the questions box. And what came up in a meeting, Shauna said, let's do a Did You Know series, just kind of things that we've learned along the way that may seem small, but they're just game changers. And you guys know what that's like when you have that light bulb moment, you learn the simplest thing and you're like, oh my gosh, that's going to save me so much time. So that's the intent with our Did You Know series. And we're going to start out by, did you know that you can tie out client invoices to the general ledger easily? There was an improvement in the reporting several years ago. And in our daily travels, we find that, there are Ajera users who aren't aware of that. And did you know there's an easy way to revise client receipts? Sometimes that can feel so sticky and tricky. Shauna's going to walk you through how we can take some of the pain points out of that. And this is a biggie that we've run into, and we've mentioned it in a couple other user groups, but felt it was worth bringing up again. Did you know that copying timesheets after changing your employee type or overhead group may have unintended impacts on your billing rates and your GL mapping? And we're going to walk you through some examples of what that looks like. Did you know that updates to overhead groups may create duplicate entry lines in your employee timesheets? And how do we take care of that? Did you know that using the non-billable billing type or status on WIP has a serious, and I mean really serious, impact on your project and financial reporting? And then QA time. But as I mentioned before, we really want your questions to come in real time. Please, just your questions, your ideas, your experiences. You might have tips that we're not aware of. We can all learn from each other. So let's keep that questions box active during this hour together. I'm going to go ahead and get the polling questions out of the way. If you've noticed in the last few sessions, I've started doing that so that we can spend the rest of our hour just talking about what we came to talk about. So our first polling question is, what report do you use to tie out your revenue accounts monthly? And you guys are coming in pretty quickly, and I appreciate that. And as a reminder, again, if you are going to request that CPE credit, we will need you to answer all three of these polling questions. So I'm going to rapid fire them so that we can make our way through them. But then also, we will need you to complete the survey because that's where you'll check the box requesting that CPE credit. So we're close to 75% of you voting, and I'm just going to give this a few more seconds because I do want everyone to have their opportunity to cast their poll vote. And it looks like we're significantly slowing down here at 80%. So I'm going to go ahead and close this poll, and I'm going to share the results with you. So 33% of you are using the client invoice staging, 33% the client invoice register, 16% of you have developed a custom inquiry, and 18% of you haven't found a report that will tie out. So what that tells me is that about a little less than 70% of you are going to learn something really great today from Shauna. That's very exciting, Shauna, to hear that. All right, I'm going to go ahead now and cast our second poll out here for you, which is, do you find it frustrating to make changes to client receipts? And we're just going to give this a little bit here, make sure everybody has their chance to get their poll vote cast. We're going real quick now. Appreciate you guys answering so quickly. And it looks like we have, again, substantially slowed down here, right about the 80% mark. So I'm going to go ahead and close this poll and share the results. And 56%, more than half of you do find it frustrating. 23% of you seem to have kind of figured it out. 8% don't know, and 13% of you are so lucky you never have to make a change. So hats off and congratulations to you all. For the rest of you, I think that this is going to be really impactful and hopefully one of those things that just helps make your job, you know, a little bit easier. That's what we're here for. And then our third and final polling question, do you use the department feature in Ajera? And you guys are coming in hot. I'm going to give this a few seconds. Wow, okay, we got 85% already cast their poll vote, so I'm going to head and close and share that. And 58, almost 60% of us said yes, 35% no, and 6 don't know. And it was important for us to ask that question for Shauna to have a feel for how many of you use departments when she's going through the overhead group changes. So that's a good amount of you using departments. And I think you'll find the information that she has to share really enlightening. One of the most fun things about these user groups and the classes we teach is that, you know, I'm always kind of Googling and investigating. And so when I was thinking about the Did You Know series, I was like, well, it's really kind of like you don't know what you don't know. And what I found out is there's actually some science behind this. So some of you may have seen this before, but there is a well-published theory or research that's been quantified out there about a know, don't know circle. And what it would say is 5% of kind of our knowledge base is what we know. We know it. 15% is what we know we don't know. I know I don't know how to be a doctor, right? I know that for sure. But there's this whole 80% is what you don't know that you don't know, which to me, I think is really exciting because that means there is so much for us to learn and explore. So I thought this would be kind of fun to share because I feel like this is really our mission, Shauna, right? This is what we do, is we want to help fill in that green circle, and you all are teaching us too. So with that, I'm going to go ahead and then switch over to Shauna, and she's going to take us through the next couple of topics.
Perfect. All right, Val, can you see my screen, my Ajera screen?
Affirmative.
Okay, perfect. Well, I want to make that 5% a bigger part of the pie, so that's what today's about. So I know that our first polling question was asking about how do we really tie our invoicing amounts back to the general ledger for the month, and we get this kind of request and question often, because there's lots of different ways to look at billed amounts. There's invoiced amounts by accounting dates. There's just a lot of data, right, running around in the system, but we do have a report that allows you to see your invoicing by general ledger account. And this is something that we do when we're reviewing client systems to sometimes spot check and see if maybe there are potential setup issues, if maybe our control accounts are going out of balance because of a mapping in maybe a project adjustment, for example. So I'm going to take you all into reports and the client invoice register. This is really what we were getting at when we were asking that polling question. And I'm in sample data, so I need to look back a little bit into our data. And I'm going to go ahead and just pick all. Again, this is something that we would do when we're looking at a database right off the bat. So you'll notice I went into my customize options, and there is an option under sort order at the very bottom for GL accounts. And then the next item that we would want to verify is that our basis is accounting date. Usually this report comes in with a default of invoice date, so just make sure you're updating to accounting date because that's how the GL is written. All right, go ahead and load this and see what we see in here. So you can see over a period of time, and again, you can run this for different date ranges, but you can see over a period of time, all of the different GL accounts that are affected through managed client invoices in the system. So if you notice, there are a few accounts that are maybe a little bit surprising to see. For example, we do have a control account where we have written to the GL through this process. Usually work in progress is just going to be generated when we're entering timesheets or billing through and generating accounts receivable. We wouldn't see it as an actual GL account through our billing process here. So you see the typical accounts, your professional fees billed, your other revenue accounts, etc. Maybe we have a pro bono adjustment on our projects, but a couple of other little odds and ends that you might not expect to see. I'm looking at this miscellaneous revenue account and kind of evaluating this and wondering, well, how did that really get there? And you'll notice that the majority of these items outside of our standard revenue accounts are coming from adjustments. So if I take a peek at this miscellaneous revenue, I can see that this was for Anderson Construction, best client ever. So I know just from experience, and I can show you this, but this is an adjustment where we have forgotten to input an actual GL account in the setup of that invoice adjustment on our project. And when we forget that, we will be pulling in whatever is set up in our company preferences for miscellaneous revenue. So in our company preferences, we would see this mapping for miscellaneous revenue, and that is when we forget to input a GL account in our setup of our adjustment phases in our projects. So that's something that's popping out to me. Again, we have a work in progress entry, again, coming from adjustments. The other thing that I think is helpful to see is how are my write-offs and credit memos affecting the general ledger? It looks like we wrote off some finance charges, so that makes sense to me. But we also have some credit memos that have impacted our write-off accounts. That's going to be coming from our designations and our client receipts. And so just a good way to see how what we're doing and how we're setting up items is truly impacting the general ledger. Oh, wow, lots of questions and comments coming in. Val, do we have anything that we want to kind of summarize or share there with the group?
Well, Nancy's asking, is there a way to run this report to be able to compare month by month? I mean, we can pull in a range of dates, Nancy, but like we can't pull in month-to-month columns. I do believe we could build this in a widget. So that's the only way I can think of. Shauna, do you have another idea?
Yes, I think we'd have to develop that in a GL entry based widget.
But that is a great idea, and I have seen those.
Yeah.
Yeah, and then Shirley said, speaking of accounting date and invoice date, is it normal to have a 2 to 3 week gap? If yes, how do you deal with the aging? Shirley, great question. And this is something that Shauna and I coach people on all the time when we review their company settings. So in your company settings, if you have your client invoice accounting date set to billing cutoff date, all your reporting will be accurate. Your revenue will hit your financial statements as of the month that you're billing, right? So in March, I'm billing through 2/28. So February is the month my revenue will land in, but my invoice date can be March 8th so that my accounts receivable aging is correct. Best of both worlds with this setup. I hope I interpreted your question right, Shirley. So our recommendation is to use the invoice accounting date in your, or the billing cutoff date as your invoice accounting date in your company preferences. And I think that's it, Shauna, for questions. The one thing I did want to point out is the GL sort on this report has not always been on this report. So if you've been using Ajera like Shauna since 2005, me since 2007, you didn't have that in the beginning, so you might not have been aware of that. So definitely explore that because it takes the pain points out of that reconciliation.
Exactly. All right, so hopefully that's a good takeaway for you all. I know in working on your side of the fence, I have had challenges revising client receipts. Maybe a prepayment gets applied specifically to a project and we actually want to use that on a different project for the client. Or maybe we are working with a client and they have in their records have paid an invoice and you've applied their payment to the wrong invoice in your Ajera system. So you're now misaligned for aging and statements, etc. So I wanted to show you a couple of things that you can change on an existing client receipts without having to void a deposit and void the receipt and re-enter everything from the beginning. Kind of unraveling that onion can be a little bit challenging. So under manage and our client receipts, I'm going to go into an existing receipt. And you may or may not notice that some of these fields are kind of open for business. We can change essentially any of the setup or fields that are showing as white and open. So for example, I mentioned sometimes we run into a situation where we've recorded a prepayment. That's what we're showing here. But right now, that prepayment can only be applied to the Marvin Gardens project. If we determine that we want to be able to use that on our Gleason Lofts projects, for example, or for another project for Dawson developers, we can actually delete the project association, and this becomes a prepayment that we can apply to any invoice for the Dawson developer client. So I'm not sure if that's something that you've stumbled across before, but that is something that you can do. The other item that you're able to change is, again, how we're associating this specific receipt across all of our different invoices. So maybe we allocated this amount incorrectly and really they were paying $1,500 on that amount. We now have this remaining $119.17 that we do have to apply somewhere. Again, that's going to be our prepayment amount in this situation so that we can get this to balance. But you have the ability to modify your amounts as well as this prepayment box in client receipts. So we'll go ahead and save that. It is going to give us a little pop-up because it wants to go back to the receipt date to kind of make those changes between accounts receivable and prepayments, but there we have it. And again, hopefully another little takeaway for you all. Did anything else pop in?
So Timothy Cox had a great just add on to what you shared, Shauna. He was just reminding us that you can also click show all invoices and apply to different invoices you hadn't applied to at all the first time.
Exactly. That's a great tip. Thank you for pointing that out.
Yeah, that's a great user tip. Love it.
All right.
Another one came in exactly like it right after. So I think we're good.
Perfect. Thank you guys. All right, so the last item that I wanted to be able to cover with you, again, is what Val alluded to earlier. We are often updating employee types, potentially changing our overhead group assignments. Maybe someone needs to change the department that they're assigned to, or we identify that our indirect costs have maybe all been recording to one department, and now it's time for us to really parse that out into an employee's home department. So I'm a visual person and I love going to the session journals. So we're going to show this to you in action so that I think it'll hit home just a little bit more. So I'm going to go ahead and enter a timesheet for our employee, Mark Royce. It's fun to be someone else for the day. And I want to go ahead and enter some project time and some overhead time as well. Oops. Doesn't look like that one is available to me today. All right. And we'll just enter an hour's worth of time. It's just always easier to see that. And you'll notice that Mark is currently a senior architect in his setup. And then down below, I'm just gonna go ahead and enter an hour of general admin time as well. So we can kind of see how this all records to the general ledger. So I'll keep this open for now, but I am gonna go into our session journals. I don't know about you guys, but I live in here. The time and expense session journals are often kind of hidden from view or default to being hidden from view. So we have to go into our little filter to see those entries. But I'll go ahead and show you this time and expense entry for Mark. And we should see, again, that we're generating some work in progress based on Mark being a senior architect. And we're also recording some overhead time to the architectural overhead group. And again, that's where our department GL entries are coming from. Okay, so this is our kind of first pass. Now I want to go in and we're going to go ahead and update Mark's setup. He's getting a promotion from senior architect to a project manager, and we're flipping him over to the interiors overhead group. So I'm going to pop over to my time and expense tab, and this is where we would update our overhead group so that he's now in the interiors department and his overhead costs will record there. Okay. And I think what I'll do, just so you can kind of see, I'm going to do a refresh here and we're going to reopen Mark's timesheet. And one of the things that you may notice now are duplicated rows in the overhead portion of the timesheet. That is because we've changed the overhead group. This will happen if someone has already started a timesheet. So you'll notice those line items are duplicated. The original row, the top row, is the original department overhead group. And now if I were to enter an hour of time below, we'll see that the time is going to be going to that interiors department. And then I'm just going to create a new row on Mark's timesheet. And you can see that the employee type is updating here when we have this new row. So I'm going to go ahead and save that.
Hey, Shauna. Before we move forward, can we show everyone, because I'm guessing people are wondering, how do we get rid of all those extra rows? Can we just show them how they can delete all of them and then it'll bring in the new group?
Yes. So
you should be able to slide and hold and delete them all.
okay, let me give it a shot.
Well, yeah, just from holiday down, delete them all. And then you'll delete the top two. Because we want to get rid of that original general too.
Exactly, exactly.
And then watch what happens when Shauna saves after she does this. Once it looks scary, people get scared, but when she saves, it's going to pull in the remainder of the new group.
And you can see that and this should be the updated overhead group.
Yep, it will be. Yep. Thanks, Shauna.
Thanks, Val. All right, so the other piece that we wanted to show you that's really important is if your employees are used to copying timesheets, this would not be the time to copy a timesheet. I'm gonna go ahead and copy this so that you can see why that is the case. So we'll go ahead and copy his 312 timesheet. And you'll notice that we can see there are the designations between senior architect and project manager. Often Mark won't see that information on his timesheet. This is usually by default hidden for our staff, unless that's something that you're having them select and update on their timesheets. So this can be tricky for them. They may inadvertently enter time to the wrong employee type when they're copying their timesheet. And again, it's copying their old employee type that was associated with that row of the timesheet. So I don't know about you, Val, but a lot of our clients who are providing those types of raises and updates to employee types, promotions, they'll often start a fresh new timesheet for their staff when that happens so that they don't inadvertently copy an incorrect timesheet and use the incorrect employee type moving forward.
Yeah, and it's a good idea to send everyone just an email letting them know that too, because if they go, I think you can go 4 weeks back on copying, is that right?
That sounds correct.
I think so. So Shauna had updated this overhead group on the bottom. So really all that's messed up here is the senior architect employee type. But had she copied the week before, the wrong overhead group also would have been copied in. So it's a big deal, and you'll notice it, at your month end, hopefully. And so whenever you have to make changes to employee types or overhead groups, it just has to be really well thought out, timed, and then, notified to employees. And I usually will run back through all the timesheets and just make sure there's no double rows. And if you have employees where you change their overhead group and they haven't entered any time, I still, just to be doubly, triply sure, will delete all the overhead group lines, save, and then I know 100%, that it brings in the new overhead group. Sometimes I wish we could keep people from copying, but we can't.
I know.
So we did have a couple of items come in. Did I interrupt you, Shauna?
No, that was everything on my end. But yeah, let's hear from the group.
Yeah, so Sandy had asked a question. She said, we noticed an issue with the counting date being randomly assigned when we write off an expense or some other circumstances that we haven't specifically identified yet. Is that part of this update? Sandy, I wrote a long response and published it to everyone, but I think you need to check your company preferences general tab. Make sure that you have inter-accounting dates engaged because you should have the ability to weigh in on that accounting date. The other thing that's really important for everyone to know is you need to be closing your monthly periods, because if you don't, and you make a change to a transaction, Ajera wants to use the original date. Excuse me. It wants the in and out to go, and Sean is showing you where that is. And then that's how you close your month there. So once we kind of draw a line in the sand, if somebody tried to change a December entry right now, it would pop up and say you can't have a date prior to January. So put those controls in place, you'll get more control over what happens. And then, this other question we have, I think is great, which is, can we have a client name that is different from the client billing name so we can group the client projects together? And Cindy Lee, what you want to research, and I put some information in here, but the Learning Center will have more information. Billing contacts, if I'm interpreting your question correctly, billing contacts is what you want to use. So billing contacts on projects will let you put a person's name, a different kind of entity name on the invoice, either above or below the client address. But we still use one client. So one client, many billing contacts. Your AR aging stays straight, all under one client, but your invoices say and go where they need to. You can even have different addresses. And then Shauna JC has asked, does adjusting the overhead groups work the same in the browser version? Yes, it does, JC. It works exactly the same. And I think Tim has another user tip for us, Timothy. You can create a widget that can tell you if you have an employee timesheet with the wrong employee types. That's a great idea, Timothy, to have some kind of verification so that you can make sure that that's correct. And then Marie has said, does this work the same in the browser-based timesheet? I believe it does, Shauna. It will.
Yes.
It would have to, right?
Yes.
Yeah, because it's all part of that. And that's another great user tip from Timothy. Thank you so much. I love it. I love it. Keep them coming. All right, so I'm going to go ahead and then take back the screen. And Shauna, do you just want to verify that you can see my Ajera?
I can see your Ajera.
Beautiful, thanks. All right, so we're going to talk a little bit about changing WIP to non-billable. And I know that we have talked about this before, but it really is so important. So what you can see here is the project earnings report. This is actually one of my favorite out of the box or native reports to Ajera. And I wanted to show you this report in the before state, before we start making changes. So you can notice here, we have a spent value of about $74,000. I'm going to show you a couple different things, hopefully, on this. We have a write-off of 0. So I want to show you what happens if I start writing off work in progress. So I don't even really have a great example here of why I would write off, so we're just going to do it because we haven't overspent any phases. But my objective is just to show you how this impacts this project reporting, and it does in a really big way. So if we go into our Oakland Heights draft invoice, and we come out to a place where we've got some work in progress here, I'm going to go ahead and go to my entries. There's a couple different things I've set up, so I'm going to make sure I'm not messing with myself here. And let's say that I want to, for some reason, somebody says some of these transactions are not valid, we can't bill them, whatever the case might be. Our suggestion would be to use write-off. If we had overrun the project and we had WIP we couldn't bill, Your project managers are probably going to use vernacular like write it off, but they don't understand what that's doing in the system. That's why Ajera champions are so, powerful in our firms, because we have to understand these nuances. So I just want you to watch. I'm going to go ahead and I'm just going to go big. We're going to write off all of this. Or I'm sorry, we're going to change this all to non-billable. And we're going to save. Save. And then when I come back to my project earnings report, I don't know which one of us that was a warning for, Sean. But there it was. All right. Now look what happened to my spent value. Non-billable reduces the spent value on transactions to 0. And spent is one of the most powerful project performance indicators you have. It's how much did we spend? What did our effort cost us at billable rates on this project? And we have all kinds of great metrics we can run on project performance and KPIs like earned value analysis, and spent is a part of that, right? We calculate our earned value analysis based on what we've spent and what we've completed. So it's really, really important here. And the way that, we would encourage you to think about this is just because the work in progress may not be billable to the client, it is billable to the project. And we all go back and look at historical projects, right, in order to help us develop fees for future projects. So if we just use that non-billable feature on our WIP transactions, or the same thing happens if I set up a non-billable phase, same exact thing, we're losing the ability to see how this project really performed. Now, what I do want to make clear is that those entries are still in the cost. We didn't impact the cost. So my profit is going to be correct still. But spent, which is so powerful, is not going to be accurate at this point anymore. So just really want to reiterate, I can't think of too many circumstances where it would ever really make sense to change WIP to non-billable. Write-off would be better. And if you've attended our series on WIP, you know that we don't promote writing off until we've overspent the entire contract, because you guys know some phases go over, some come in under. So we look at the entire project. So hopefully that was a nice visual impact on you for what that does to our project reporting here. Now, what I was anticipating is that some of you might say, well, what about if we have a pro bono project? We have a client that we have such a tight relationship with. They're, redesigning their office or buying a new office or whatever. We're going to help them, and we're not going to charge them. What we would recommend, rather than setting up that invoice as non-billable, or that project, I'm sorry, is non-billable, where we're not going to generate a spent value, let's set it up as hourly. And I don't have a lot of time on this. There's only $220, but this will give you the process. Let's go ahead and set up that project as an hourly project. And then when we're ready to bill, let's do an adjustment. And there was already one in here, so I'm going to add a new one so I can show you the GL account mapping that we would promote for this. So we can call this pro bono adjustment, and I can make this a -220. And this is the approach Shauna and I have agreed that we like the best. I've done this as an expense account and as a revenue account, like a contra revenue account. I've landed where I like to see this up with the revenue accounts. The really great thing about this is, if you don't know, when we do invoice adjustments, Ajera is still going to credit your professional services revenue for this full $220. The adjustment is a separate entry, and you get to control the GL account on this. So when Shauna was showing our client invoice register, when we were reconciling to our GL, and we saw a foreign exchange rate adjustment, we saw a pro bono adjustment. These are things that we can do. Retention, we can do this way. So these are things we can do here, and you get to control this and the financial reporting, which I just think is really, really powerful. The other great thing about this, and I did do this as standard practice, is you can write a love note here now, right? So we can write a little love note, and then we could send this off to our client as kind of a progress report. We could even say monthly progress report up here instead of the build through dates. We can put whatever we want down here. Here's the thing to think about with pro bono. If we don't do something like this, like if we don't send something to the clients that we're doing for free work for, how will they know the value of the work that we're providing for them, right? So something for you all to think about. I think it's a great way to use the adjustment tool. You control where that lands on your financial statements. And I think, you know, that's also a really great number to have in front of your leadership team to see how much pro bono work, you know, we are doing every month. So Shauna, anything to add to either of those topics?
So a couple of questions came through about what happens when you bill a project to completion. What happens to that WIP? Does it get flagged as write-off or non-billable? And my response was that the WIP is cleared. It's not flagged as write-off WIP or non-billable WIP, but it is maintained in the spent so that you can continue to evaluate that versus your billed amount, etc.
Exactly. And last year we did a WIP series. I think we were just going to do a one-part WIP user group, and then people were asking for more, so I think it became 2 parts. But if you go to our on-demand events and just search in the Ajera on-demand events for WIP, we cover all of this in a lot of detail, and we have a WIP management document that we would be happy to send you that shows you, you know, how the GL mapping works, when you clear, when you write off, what credit memos do. And we give you a suggested policy, which is just what, you know, Shauna was saying, like at the end of, or once we've exceeded, our spent has exceeded our contract value, you want to start writing off WIP in the amount where we've exceeded. And here's the thing, if you start writing off, all the control is in your hands. Sometimes people say, shouldn't I wait to write off until the end? Well, you might miss the opportunity, because if you let those WIP transactions go through with other billed invoices, we can't get our hands back on those transactions unless we reissue invoices. If you apply a status of write-off to your WIP entries, those written off entries will always be part of your latest draft invoice. So like, let's say towards the end, we negotiate an ad service, we'd be able to bring those entries back into a billable status, and you would be able to bill them. So when we overspend, writing off as we go gives you all the control and the best reporting. If you've got straggler WIP and you didn't overspend, clearing is the best option. But anyway, we do have a document. We'd be happy to send you on that too. All right, any other ones that we should talk about, Shauna?
No, I think that covers it.
Beautiful. All right. So then in that WIP management series, we wanted to show an example of missing transaction rates on unit-based activities. I don't know if this has happened to any of you ever, but it's happened to me, and I had to figure out how to fix it, and it wasn't super intuitive. So you can see my Oakland Heights is flagging a yellow warning, which means there are transactions missing billing rates. You should have a widget for this too. And we talked about billing prep a couple sessions ago, because we can't solely count on this yellow. For example, if we had missing billing rates on Gleason, the over budget flag overrides the yellow. So we could have yellow and red, but all we're going to see is the red. Anyway, on my Oakland Heights invoice, which I apparently probably still have open, we've got missing billing rate here for a parking entry. This happened a lot in my life. A dear engineer that worked for us, greatest engineer, I'm so talented, but just we could never get through that parking didn't have units. So this is how I learned this. On your unit-based expense activities like mileage, we got to have unit to trigger the billing rate. On those where we don't have units, your rate tables aren't looking at units and it trips up the system. So you can see here, I'm going to try my recalculating, doesn't work. Now I could just override this. This is going to create an issue. If I override this, it's going to create a write-up on my project reporting and on my general ledger. So we always, whenever you see a warning like this, my ask of you is just stop for a moment. Let's figure out the problem, go back to where it started, make a correction, fix things the right way. Because also forcing billing amounts does not update your spent value on your project report. So we really want to fix this the right way. So this is my first thing. I try to change the units to 0. It doesn't work. If you're not aware, there is a hidden unit. So you're going to want to click on your blue plus and add cost units into your view. When I delete my cost unit, I can now recalculate and get my billing amount. So I don't know if that drove anyone else crazy, but that one was a thorn in my side until I figured this out. So blue plus, add your cost unit, just remove that unit and then always recalculate the billing rate. If we have an employee who's not charging at the right rate, we don't want to just force that rate here. We don't want to force the billing rate on our labor either. Let's say that Mark Royce, we raised our senior architect rates and this really should be 115. We don't want to do this. It didn't impact our spent. It created a write-up on our report. We want to go back to our rate table, make a correction, and then do that recalculate. So, Shauna, anything to add on that?
No, it's something we run into a lot with those expense units, especially if people are inputting units on expense reports for those non-unit based items. So it's a great instruction.
Yeah, and JC just asked a question that I don't know the answer to. So JC, I'm gonna have to test that and get back. Well, I guess I could right now, huh? So who was this that we just fixed? Mark Royce from 4/11 of 22. We just took that cost unit out.
I think it writes back to the expense report.
I think it does too. I want to make sure. I've never checked it with units. It will write back with other things. So when you make corrections in WIP, it will fix timesheets to align with them and vendor invoices as well. But I've never been asked about the unit. And that was from April, right, of 22?
I think that's what I saw, yep.
So it did. Great question. And we all just learned something together. Thank you, JC. All right, so I think that's all we have time for today. We got through all of our examples. Shauna, I think we're getting better at fitting into the 1 hour.
It's hard. We'd rather spend all our time with you all, right?
I know, but that's been a big point of feedback. You all have said, don't bite off more than you can chew. So it looks like we're starting to get that down. So just to close us out and kind of round things out today, Keep in mind that client invoice register can be sorted by GL for easy month-end tie-out. That's a great tool. Revise your client receipts rather than voiding if possible. Shauna showed you how we can do that, and Timothy gave us some good tips too. Be careful. Anytime we change employee types or overhead groups, let's let everybody know to not copy. And really, I mean, they only can go 4 weeks back, so it's a short period issue. Start a new timesheet for them so that they can't copy last week's. And avoid using the non-billable billing type. It really does have a negative impact on our project and financial reporting. Our next user group is going to be on security roles. This was a suggestion we got through the survey. There are some nooks and crannies in the security roles that can cause some issues. Just last week, one of these little weird snafus came up for someone I was working with, and it was something that, you know, you wouldn't think about unless you knew it was an issue. So we're going to share what we know. We're going to show you some common things to avoid, some new features, and just best practices. And that's going to be on April 12th, 1:30 to 2:30 Eastern. We hope that you can all join us for that. If you all aren't aware, we do have on-demand and live classes, and you can find these out on our website. They're very affordable. They're topic focused. They're an hour and a half. You always get some kind of dashboard, but even more powerful, you get the recording for, I believe, a year. So they're really good value. If you're looking for some really targeted learning, you might want to check those out. I think we have 20 or 22 of them now. And I really want to wrap up with talking about the Ajera User Association. If you are not currently a member of the Ajera User Association, I really recommend you check it out. This group has been active with Ajera for as long as I can remember. And their annual conference, which is coming up next month, I cannot actually believe we're saying next month about April already, but we are. April 25th through April 28th in Orlando. And the early bird discount is over, but we have a special discount for you, a discount code. So if you still would like to register, 10% off using the code SN10. And I will tell you, I have been to a lot of conferences from a lot of different associations. The Ajera Users Association is very unique. It is a learning experience. So if you've been on Ajera for a year or so, but you want to know more, or you're brand new and you want to know more, or you've been using it forever, but you want to dive into some tools you haven't used, I'm telling you all, it's 8 to 5 classes. It's all day classes. A wide variety of information will be taught. If you go to the Ajera Users Association, the entire schedule is there. We'll be there as the Platinum sponsor, where our team is teaching some classes. So hope to see you there and really encourage you to check out this organization. And just to wrap up here, if any of you have a success story, and Timothy, you gave us a couple user tips, you might be a great candidate for this. We would love to have users co-present with us in upcoming months. We've had a couple over the last few years, but we would love to have you all come and present with us. Just reach out to me via email and let's talk about what you've come up with and let's share it. If you have topics you'd like for us to cover in future meetings, we want to hear your ideas. This is all about you, and we plan on having these meetings forever. So we got to keep coming up with fresh ideas. So please, if you don't mind, just take a few moments to fill out that survey and pop in any ideas you might have. Also, let us know how we're doing. We really do read every comment. We take to heart what you say, and we are constantly trying to, improve these user groups and, address the things that you say would make them better. If you haven't yet joined our LinkedIn virtual Ajera user group, please consider doing that. It is monitored. We try to keep vendors out. We just want that to be a place where Ajera users can share ideas. Whenever we learn something new that we think everyone needs to know right away, we'll post it out there as well. So just another place where you can get introduced. I do want to let you know that we, as I said, we're monitoring that. So we need to have business addresses and things like that. But you can just email me too if you have any challenges. So we want to hear ideas. You're our inspiration. This is the most fun hour of the month for us to get to spend with you. So thank you so much for sharing part of your day with us. We hope that you have a great rest of your week, and we look forward to seeing you next month. Thank you, Shauna. Thank you, everyone.